Welcome to part 3 of Family Credit Management's Personal Finance Made Easy workshop. Now, this part we're going to talk about, this is the last section, but certainly not the least important section. We're going to talk about some general tips and ideas, and also one of the most important things to all of us, and that's our credit report. You know, when I go out places now, I'm at a party or something, I kind of feel like how a doctor must feel. I'd say that every single time out somewhere, somebody comes up to me and says, I've got a friend who has this on their credit report, or I know someone who had a short sale or some charge-offs, or wanted to know if they should close their credit card. What should they do? And unfortunately, it's very difficult to give an across-the-board answer for credit reports because they're so individual to each and every one of us. But they are really important. Why are they important? Well, take a look at page 63 of the workbook. And in there, we've got some of the specific things that they're used for now. And when I started in finance and banking over 20 years ago, I never would have dreamt that your credit report would be used to make hiring decisions by employers. But it is. I never would have dreamt that your car insurance company would be pulling your credit report in order to help determine the premiums on your car insurance. But they do. Utility companies, renting apartments, mortgages, credit cards, so many different places are using your credit report now. It's become so much more important than it's ever been. And often we think, you know what, I'm not going to worry about it, or there's nothing I can do about it, but that's not true. There are things you can do, things you shouldn't do, things you need to watch and protect over. So let's start thinking about what and why. First thing you need to do is this weekend, get a copy of your credit report. Now, there's 3 of them: TransUnion, Experian, and Equifax. Those are the 3 credit bureau reporting agencies. Now, each of those are completely separate corporations. They don't work together, they don't share information, they are autonomous. So, if you have a major purchase coming up, if you're thinking about getting a mortgage, thinking about getting a car, mortgage certainly is going to pull all 3 of the credit bureaus to make sure they have all the information. So you need to make sure that you've seen all 3 of them. If you're not planning a major purchase, I strongly suggest you get one of them in the next few days. There's only one place I recommend you going to get it, and that's annualcreditreport.com. This is a free service for everyone. We are all able to get a free copy of our credit report every year. Why? Because the Federal Trade Commission strong-armed them in saying that they have to get you your credit report because so many of them have errors on them. And these mistakes can be costly. Mistaking your credit report can cost you interest rates, paying high interest rates on mortgages, the inability to get a loan, losing a job, not getting the job, losing a promotion, all sorts of things can happen. So the Federal Trade Commission came and told the credit bureaus, you've got to set up a way for us to get copies of our credit reports. That's annualcreditreport.com. Now, I know there's some places that are on TV you hear about that sound like they're the place to get it. They're not. This is the only place. So pick one of them. Take a look at it. See if everything looks accurate. If you don't need it to get all 3 of them today, I suggest every 4 months getting one. So this way you're self-monitoring your credit. You're able to, every 4 months, pull another credit report. Is everything on here mine? Is it paid as agreed? Does it all look right? Inquiries. What's an inquiry? Inquiry is credit report language for, did someone take a look at my credit report? Do I know everyone on there? Does that make sense? Identity theft is a problem still. So this is a way you can self-monitor it and make sure you're watching and seeing exactly what is going on. Next thing people want to know is, what's on my credit report? How do they know how much money I make? Actually, your credit bureau, your credit score doesn't care how much money you make. They don't even care if you have a job. What they want to know is, how well do you pay your debts? How well do you manage them? More importantly, how well do you manage them over an extended period of time? That's why they want to see longevity to accounts. So they want you to get some accounts, have them over a long period of time, and keep them. Because almost every individual and family at some point has financial problems. So they want to see not how'd you handle them when finances were great, how'd you handle them when finances maybe weren't so great. And that's one of the things that's going to be looked at in the score. But it may have where you work. It's going to have your current address, your previous address, maybe a couple addresses back. It's going to have any public records, lawsuits, judgments, divorces. And then the most important part, it's going to have any of your specific credit card transactions, lending accounts for the last probably 10 years. Sometimes longer than that, but usually about 10 years. It's going to have the creditor's name, your balance, your high credit, which is important because they want to see if you've gone over your credit limit, the largest amount you are delinquent on it or past due, when you were past due, and then it's going to have calendar for last 12 months, 24 months, how'd you handle things each month, where you're current, where you're past due. And that's going to be the bulk, and then the inquiries. Now, people say, well, inquiries, I've heard that that's going to hurt my credit report, my credit score. And can it? Yeah. If you're applying for credit all over the place, lenders don't see that as a very good sign. They see that as dangerous. Why is someone so desperate they're applying for credit all over? Banks don't want to give money to people who are desperate for money. So, but you can also have inquiries which aren't going to hurt your credit score. So if you want to take a look at your own credit bureau report, that's not going to hurt your score at all. Let's consider the soft inquiry. If you want to, if you go for insurance, that's not going to affect your score. And then if you go for employment, they pull it, that's not going to affect your score. But you have to be careful as well, because some people say, well, I want to close up. I don't use these 3 credit cards. Can I close them? And tell them, you better be careful. Closing a credit card can make your score drop. Now, that seems to me to be against conventional wisdom, but that's a fact. It can make your score drop. Why? One of the single most important factors on your credit score outside of how you've paid your debts over time is now your credit utilization ratio. Now, it's kind of a big scary phrase, credit utilization ratio. But what is that? Okay, it's how much of your credit are you using? Credit utilization ratio. So you've got total available credit on your credit cards of $10,000. You've charged up $8,000. Your credit utilization ratio is 80%. Now what do the banks want to see? For a while it was 50%, no more than 50%. But that's changing now. Now it's 10 to 30%. So that means you got $10,000 in available credit. They want to see somewhere between $1,000 and $3,000 being used. Why? Well, because credit cards are expensive ways to borrow money. They've seen people that tend to have financial problems run balances on credit card debt month to month. They tend to max out their cards. They use their cards and maybe even use them more than they should. So if you've got a card that you use, even if you pay it off, your credit score and report doesn't know you're going to pay it off, even if you have every month for the last 10 years. So if you've got an old account you've never used that has a high balance and you close that, that could really adversely affect your credit utilization ratio. And conventional wisdom says, yeah, close the card, I don't use it. How can that possibly not be good? Well, that's how. That's how. So people often want to know, should I get a compromised credit score? If you don't have any idea what your score is, you might want to. You might want to, when you get your credit report, that's completely free. For a few dollars, you can get a copy of your credit score as well. So most of when someone's talking credit score, they're usually referring to your FICO score. FICO score is going to be anywhere from 350 to 800. What's considered good? Usually you want to be 700 or higher. Start to get below that, now you're getting into a risky level. But don't be too worried about how high your score goes. You know, if you get 80, I've seen scores going 805, 810 of the 350 to 850 ratio range. I've seen a few people go up above 800. I've never once seen an 850. I don't think it possibly can exist. If you're up into the 700s, you're doing fine. Don't worry about it. But keep track of it because you could ruin it, hurt it in the future by closing accounts, charging up balances, doing things like that that you shouldn't do. Now, if you take a look at page 66 of the book, you'll see some illustrations about exactly what happens with interest rates and a better credit score. Because as you can see from the book, the better your credit score is, the lower rate you're going to pay on interest for loans, the lower down payment they're going to require, and the easier it's going to be to even get the loan in the first place. So having a good credit score really does matter. Now, I've had some people say, well, I'm not planning on getting a home, getting a mortgage. I got my house. I'm staying here. I'm not going to be too worried about it. Well, are you going to ever get car insurance? Are you going to ever get a job? What happens if your circumstances change and you do want to get a bigger house or a different house or something happens? Your credit score is too important. You've got to make sure you're monitoring your credit reports, looking at them regularly, making sure they're in the right direction, and making sure you're not doing anything or taking any steps to hurt them. So, what happens if you have bad credit? I've had a number of people tell me that I can't make it good. You know, my credit's bad, I can't worry about it, I'm just going to keep missing payments. But your credit report is a snapshot of today. And every day that goes on that you start getting your accounts paid as agreed, the better. That's what's key. Getting the accounts paid as agreed, getting them going in the right direction, and having some good, what they call trades or line items on that credit report. Having them showing good. Having them showing that you're paying them the way you're supposed to pay them. Now, if you're past that period, you've got collection agencies, you need to start building things back up. One of the things I recommend is getting a secured credit card. So if you can't get credit, you don't have credit, you've got bad credit, get a secured credit card. What a secured credit card is, you take $200, $300, put it in a savings account, and they hold that money off to the side, give you a credit card just like everyone else's, and you pay it as you're supposed to pay it, you start building yourself up credit. Now, there's some secured cards out there that aren't so good, some secured cards out there that are pretty good, so I suggest you do a little research and try to find one that's low fee. There tends to be some that are pretty decent. Consumer Reports every year, they come out with what they think is one of the better secured credit cards. So there are going to be fees with them, no doubt about it. But it's worth it to start building your credit. You get the secured card, you charge up your gas, charge your groceries once, pay it off at the end of the month, do it again next month. That will start getting your credit going in the right direction. One of the things I encourage everyone to do is take a look through our book, our Quick Money Don'ts. And in here, we've listed several specific things that we encourage everyone to do or to think about when they are thinking about their finances and thinking about what they should do and what should they not do. So on page 70 of the workbook, we've got several things we've already talked about during this workshop, and that is our list of quick money don'ts. You know, there's a lot of things in there specifically that you shouldn't do. And take a look. One of the things we talk about is don't help your children or even your parents too much. You know, your retirement is key. You can't borrow money for your retirement. Your kids can borrow money for school. They can borrow money for their first apartment. You can't borrow money for your retirement. So don't take out home equity on your house. We talked about getting a 15-year instead of a 30. Your house isn't a piggy bank. Your house is meant to be a place that you live and building a financial future. It can be the cornerstone for our finances, but you don't want to take money out of it all the time. That's what's caused a whole lot of people a whole lot of problems here not too long ago. We talked about payday loans and impulse buy, and that is certainly a problem for a lot of people, is making these impulse purchases. Now, we've talked about a whole lot of different topics during this workshop, and I want you to not think that it's over, because it's not. In fact, it's just the beginning for a new financial you. And this book shouldn't be used just today or just this weekend. It should be something that is a living, breathing document that you're going to use and reuse and think about and change and alter. Your goals are not going to be the same 3 years from now that they are today. Most likely they're going to change several times over the course of your life. You need to have them evolve with that and have this book evolve and change and adapt and reuse it and rethink. As I told you in the back, we've got our 100 ways to save. And that is something that every family should review at least once a year, because you want to make changes in here, and we all get wrapped up in bad money habits. I do it. I spent 20 years working towards finance and teaching about it, and I've got to keep on guard for myself and what I should do and what I shouldn't do. Now, on our website, once you've completed this process, you've thought about everything, on our website we've got an interactive quiz, which is going to score on what you know, because a lot of people think, oh, I don't know if I learned all that much, but I can guarantee you that you've learned a lot more than you probably think you did. So, a little bit of questions about what's a certificate of deposit, and goal setting, and spending plans, and stocks, and seeing how much you really know, and maybe some areas you need to go back and brush up on again. What this workshop was about more than anything else is about changing habits, because money management is often about habits. We go out to lunch every day because we've been going out to lunch every day. We start realizing, hey, you know what, if I can spend $5 a day on lunch and brown bag it, that's just a change in my habit. And might even start to like lunch even a little bit better. Certainly going to start saving money. It's about creating a new financial you. And good things don't happen overnight. If you have a relationship with someone, no matter who it is, that relationship didn't develop overnight. It developed over work and time and making contributions, and at the same way financial success is. It's about making changes and being focused. You've created a plan. You spent a fair amount of time today going through this workbook, coming up with answers and a plan and goals. And now it's about whether or not you're going to take advantage of these tools, the workbook, the credit and debit card saving sleeves, the 100 ways to save. Are you going to take advantage of these? Are you going to stay focused on them? Are you going to make these changes? And are you going to take the exact steps that you need to make sure your money's doing for you what you want to have it do? You work very hard to get money. It doesn't come easily. But man, it sure can leave easily. So take these lessons. If you want to ever speak with one of our people, they're available online by chat at our website. Call and talk to one of our credit counselors for some guidance, suggestions, questions about your credit reports, creating a plan, or having us sit down and create a customized action plan just for you. I hope you got a lot out of this. Hope you have some fun with it. And I know you're going to do well. Good luck.